Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. Also, I do apologize, yes, I am sick. If you guys watched my earlier video, you probably already know this, but yeah, I've been under the weather for the last 2 days so far. Don't expect it to get any better until around like the end of the week, so please bear with me during this time. But nonetheless, we were watching the FOMC meeting pretty closely the other day, and we do see here the pivotal moment in the Fed press conference when incorrectly told that the market had reacted positively. Jerome Powell seems frustrated and lists only reasons why this is the wrong interpretation. Very telling for stocks. Now, I'm not going to play this video because it's 2 minutes long, but I will say this. There's one thing about the Fed that always comes to mind to me is watch for when they start to blame others. Back in the summertime, we seen the Fed really kind of starting to blame the ECB and major central banks about issues with inflation and what's happening on the macro. That was a telltale sign for me. Recently, around these FOMC meetings, we haven't seen a huge price shift within markets so far. But I will say one thing is for certain around me is the fact that I don't get my hopes up waiting for a Fed pivot. If they do pivot, that's incredible to see. But until then, I'm not going to, go all in hopes that they do pivot at one of these FOMC meetings. But shout out to Andy West for this video. What I will say and what I will play is this video over here. It's about 1 minute and 46 seconds long, and we do see no pivot. That's the key message from yesterday's Fed presser. This dictates near-term markets. Given 2 million impressions of yesterday's tweet on the Q&A section, suggests significant interest, and most don't have the time to watch 45 minutes. Here's the key points summarized to a 1 minute and 45-second long video. Like I said, shout out to Andy West over on Twitter. I'll play this real quick and then I'll talk to you guys about it.
Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, fully exceeding the supply of available workers. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. It is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
And of course, when we look at a lot of this stuff, I just think that it's interesting to hear them talking about, a softening, all right, soft landing. That has been the big thing for a while. Listen, at the end of the day, we know inflation is only going to get a lot worse. I do think that hyperinflation is around the corner. I think that, and again, going back to a few things around like crypto as well. I have been diversifying a lot of my investments. I've been investing quite a bit into physical gold. I've been buying crypto heavy. I've been averaging in when we do see major drops. I will get to that point here in a second, but when we look at the macro around the economy, economically, I do believe that we have a lot more pain to withstand going into even 2023 and 2024. Again, we are watching what the Fed is going to do. We will definitely have to wait and see what happens in the next FOMC meeting, which is going to be in December. I think that that's going to give us a little bit of a more clear sign on where things are headed, because we do see a lot more economic data being released, and they will be discussing a lot more of their plans during that time. But I've also been looking at a few things around some charts, and we do see over here from the 10-year, the U.S. Treasury 10-year, 2-year yield spread just hit 58 BPS in the wake of the hawkish Fed press conference yesterday. Bond market saying recession will be deeper. Meanwhile, equity volatility is having another day at the beach. And here you guys have it. This is pretty insane to me. But yeah, I do believe that in terms of the recession, I mean, listen, we technically, going off of the 2 GDP negative quarters in a row, we have been in a recession since the summertime. We haven't seen any, major announcement of this. Nobody has been talking about this. The time that I see, and I even said it back in the summertime as well, the mainstream media will most likely be talking about a recession in January. The crucial thing to pay attention to, though, is when a recession turns into a lot worse. A lot of people have been calling for a depression. A lot of people have been saying, it's going to be a lot worse than 2008. I do think that a lot of it is also fear-mongering, not going to lie. I don't think things are going to get as bad as most anticipate, but I do think that this could get pretty rough. We do see over here Ray Dalio is warning a painful credit crunch could tank financial markets and spark a recession, as a surge in government bond sales could cause private credit to dry up. Something is going to break. Honestly, I'd argue that something already has broken. We talked about the currency chart recently. I mean, that was probably, I want to say maybe 3 weeks ago, almost a month. It was all the currencies combined on one chart, and we were really kind of seeing the US dollar, and it was like, this is what they want you to see, and then this is reality. Reality is the fact that the US dollar will start to collapse. The problem is that the cost of goods is going to surge. So that is going to be hyperinflation standpoint. In fact, I actually just got an email the other day, maybe you guys have gotten one as well, that my electricity is going up even more. Instead of I think it was like 1250 or so kilowatts an hour, now it's going up to like 1460. So a huge increase just in time for, of course, the winter. Anyone that is using electric heat or anything like that is going to get slaughtered. I mean, economically right now, things are not sustainable. I seen a jobs report, and somebody put in the bottom, it was like, now I could work 3 jobs to just try to get by. Some people will laugh at that, but it's really not funny at all. Right now, economically, things are looking, really dark. And I really would love to know what the Fed's plan is here, because so far their plan has been complete nonsense. Now, of course, we also look at a few things around the job market. We do see over here layoffs announced in the last week. Lyft, 13% of workers. Open Door, 18%. Stripe, 14%. Chime, 12%. Twitter, 50%. Morgan Stanley, percentage unknown. Everything right now is right on the brink. Liquidity is drying up around a lot of these major markets. We have been paying attention to that. We looked at the real estate market. We have been paying attention to the real estate market closely. I've actually been looking at real estate to buy, and I've been waiting and watching for them to really kind of drop in price and value. But everything is happening. I mean, everything that we are seeing recently is pinpointing to a recession that no one wants to talk about. No one is talking about a recession. It's crazy to me. It really is crazy to me. That's why I said, go into next quarter, we'll say like the first quarter of 2023, that's when we will see them finally say, okay, yeah, we're in a recession. Even Bank of England warns the country is entering the longest recession in modern history. I mean, you can't make this up. Things are moving very fast around the economy, and it really kind of starts in some of these areas. The Bank of England, we've been paying attention to England. First off, they want to become a crypto hub. I also think that they see the value proposition behind crypto. I also think that they see it as almost like a saving grace. We don't know how things are going to work all that well around that. We know that liquidity 100% could be solved through crypto, but right now, this market I've said it time and time again. Their plan is essentially to collapse the system so that they could usher in this new system around CBDCs and digital assets. Is that vision coming true right now? We have to wait and see. But it would be crazy to argue that we are not in a recession. I mean, right now, you could see it when you go to the grocery store. You could see it in terms of your monthly payments for rent. You could see it in terms of your monthly payments in, electricity usage. Everything is skyrocketing in price. But the problem here is that, most individuals, especially in the United States, can barely afford to get by in terms of their rent or even their mortgage. And it really is the truth. And like this is actually pretty crazy to look at. And again, nobody is talking about this. We do see over here from Wall Street Silver, interest payments on our $31 trillion in U.S. debt is about to exceed what we spend on the Defense Department. We are entering a death spiral. Interest on the debt will double if they leave rates above 4% for about 3 years. All of the debt maturing rolls over at higher rates. Again, all of this, everything that you could, every single major chart you could look at is pinpointing to something breaking at some point in time. We are paying attention to all of these major charts. We are paying attention to every single indicator around a possible recession, around a possible collapse. Economically, I do believe that the financial markets are going to take a huge hit. And this is concerning, especially if you're watching, crypto, if you're watching anything. Now, of course, with crypto, yes, crypto has been taking a little bit of a hit, but it's interesting, right? Because to me, times like these where everything looks extremely dark are also some of the greatest opportunities within this market. We do see just in Coinbase, Coin reports a net loss of $545 million in quarter 3 of 2022. That's insane. Now, of course, when we look at crypto, everything was down just recently. I know that a few tokens that we were looking at, like QNT, I recently just reported on QNT actually. And I was talking about it, how it could possibly have, a deep correction. Here are some of the top gainers. Some of them are looking pretty good. Here are some of the top losers. Dogecoin down almost, 11%. I don't know where QNT is. I know QNT was down quite a bit. So yeah, QNT is down about 3%, almost 5% on the 7-day span. Nothing too crazy there. But yeah, in terms of the market, it did take a hit. We're under $1 trillion still. Wow, we were under $1 trillion. Let me refresh just to make sure that this is actually up to date. So yeah, we're still at around 1 trillion over here. But I don't think that this is updated because the total chart over here is saying that we're at about 961.5 billion. And yes, I do have this time frame here on the chart. I'm going to talk to you guys a little bit about that and really kind of address why I have that. But yeah, we could see the drop here if we go back on the 3-day span. So recently, if we're going down to this price, it was about 4.18%, but going down to the bottom of this candle wick recently, it was about like 6% total market drop. It's pretty, this is the entire market, so that is a pretty large amount to drop. A lot of people have been telling me, this market has bottomed fully out. Do I believe that? Technically speaking, I think that we have even, realistically speaking, if you're going off of the average time frame, November will be our bottoming point. I said, have we bottomed? This goes back to September, by the way. I said, have we bottomed? Maybe, maybe not. No one knows for sure. I'm watching November closely still. Typical bear market time frame. Give Sir Rob Art a follow to stay updated on the time frames to follow. And yeah, we even see him responding saying, cheers, brother. Either way, we start dollar cost averaging and diversifying, and we don't chase bottoms or tops 100%. Listen, I'm not trying to chase a bottom here. All I know is that this, right? As everybody has been focused on the economic downturn that will most likely happen at some point in time. Like, listen, do I think that 2023 and 2024 will be dark? Yeah, but it's probably going to be the ending quarters of 2023. I think that the first half of 2023 is going to be very exciting for crypto. If you go off of, this could be our wave 5 if you want to look at it like that, but if you go off of the COVID time frame over here, so first off, even going back to the last bear market bottom, let's go off of the topping point here, so there you guys have it. So this was about 300, we'll go off of, this candle here. So 342 days it took crypto to bottom out officially from the topping point of 2017, 2018 to the bottoming point. We are currently at 359 days. If we go off of that time frame, realistically speaking, this would be our bottoming point around this range here. Is that possible? Sure, 100%. We could have already bottomed out. If we didn't bottom out, though, like I said, like this November into December would be our key time frames to see a major bottoming point for crypto. Economically, or I should say, in terms of the financial markets, we could see a major drop, like a 72% drop, after we start to pump. I mean, look at this going all the way back to 2017, 2018's bottom. We pumped up about roughly 300 and we'll say 330%, 340%. At 340% from here, just to give you guys a quick insight, so 340% would take us to about $4.19 trillion. Then a 72% correction. So a 72% correction would bring us right back down to about $1 trillion. And then what happened after COVID, and I'm just saying hypotheticals here. I mean, like if we had like a black swan event within, the economy, say for so, recession is confirmed. Okay, everything's going to zero, which again, during those times is like the key times to really kind of look at this market. After the fact, and this is long term, by the way, we could see something like a 2,700% run. I mean, this would be like by 2030, I would argue. Because again, like this time frame is like well over 2+ years, maybe even 3 years, maybe even a little bit more than that. But this is what I could see long term. Like by 2030, this market could balloon to some astronomical numbers. But I'm not saying like this is going to happen all at once. I mean, we could go much higher on the next wave 5. I know a lot of people have been calling for Bitcoin to go to like 160K, tokens going to $5, $10, $20. That's crazy. But one thing that I have been looking at is also the macro. Where could we go on the macro fib extensions on the total? The biggest thing that I have been looking at is really kind of some of these fib outreaches. I mean, the 1618 would be about almost $4 trillion. Now, is that gonna be something that realistically happens? Not technically. I mean, like we shouldn't be looking at that 100%. Going off of some of the past fib extensions, if we were going off like the 2017, 2018 all-time high in this bottom back here, we outreached to about roughly the 1618 back here. So, I should say we should be expecting this, but I don't think that we are going to see that 100% morph into reality. So some of these, numbers don't morph perfectly back into, okay, well, we're going to go to this number, that number. No. This is just to see where things were kind of headed during that time. There's some numbers back here that we could kind of follow going all the way back to like 2015, 2018, and we can kind of see where this went. This almost averaged to like the 1.272. This is on like the macro, which technically would take us to about $7.53 trillion, which I could see realistically, happening, or even to like almost $12 trillion for the entire crypto market. So as the growth really kind of happens, I could see some of these higher numbers being reached, but this is why I have been averaging in, just because you don't know what's going to happen next. You never know. I mean, the media will try to turn things into a full-on, all right, everything's going to die, everything's going here. But to me, like I said, I've been averaging into crypto because I do believe that we might already have seen our bottom, or if we didn't, we will see it within the next 2 months, including this month. So by the end of December, we should have our full bottom realized in, and we should be prepping for the next major run-up within crypto. And yes, I know that a lot of people have been concerned about the economic outlook macro-wise. To me, things could happen in 2024. They could happen in 2025. They could stretch this thing on for a while. But I think that we will see some black swan events. I think that we will see some economic downturn here and there. But ultimately, I think long-term, things could look still pretty good. I mean, theories can go 50-50 either way, but to me, I'm preparing for, anything. I'm 50-50. I have, I'm hedging with gold, I'm hedging with crypto, and I do have quite a bit of stables on the sidelines just in case. but I don't have unlimited money. Listen, nobody has unlimited money. I'm not buying every single day. I'm not buying every single hour or anything like that. But I am averaging in. I'm taking positions because you never know what happens next around crypto. It's an extremely volatile market. So with all of that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day, beautiful night. If you guys are on this beautiful world, this has been Nick. Peace out, guys.